Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to take a look at the USE minis and how they unfolded yesterday using our MTP add-ons for NinjaTrader 7, which is what you're looking at here. I particularly want to focus on how we use the larger degree trend to help filter our automatic setups. When you first come into MTPredictor, we use our STF color, and as you can see it would have been blue stroke black. So these setups we have here would have been signaled as potential trades. This one made the 100% initial risk level and this one also made the 100% initial risk level, but neither of them got to their targets. So is there any reason why? Well, what we teach as you become more experienced is rather using the STF, which is a very simple way of gauging the large degree trend based on basically just an indicator, and all technical analysis indicators have the problem that they are lagging. In other words, they change too late as the trend changes. So what we do at MTPredictor is we then move to the higher time frame, and we use what we call leading indicators, which are our DPs, WPTs and Elliott wave patterns. So let's move out to the 15-minute chart now. Let's see what a difference this can make. Here the market was rallying up like this. Now what we did before the market even opened yesterday was right mouse click, have a look at the Elliott wave pattern coming up into here, and you can see MTPredictor found a 1, 2, 3, 4, 5, but the most important thing, if I zoom in a bit, was that the high basically as of yesterday and the day before was basically pretty much double topping right at our minimum wave 5 WPT. In other words, this was indicating that on the 15-minute chart the market had been topping out and was therefore likely to decline. Normally we expect to decline into the DP from the wave 4 low, which we can place on the chart down here. So we're anticipating that the market is going to decline from this wave 5 high at our minimum wave 5 WPT down into our decision point zone here. In other words, the large degree trend is anticipated to be down. Now these are great because these are what we call leading indicators. You can see here that this DP is on the chart here before the market even gets down to this level. And that's the key to this, is that we can anticipate in advance areas where the market is likely to go to, and because of this we can catch turns in the market as they're happening. So now when we go back to our 3-minute chart, we now know that the trend yesterday was down, therefore these setups here were against the large degree trend. So if you did want to take them, what we teach is that you bring your stop to break even as soon as the market reaches the 100% initial risk level, which it did in both these trades. Therefore you could have been stopped out for break even. In other words, the use of the 15-minute chart and as such gauging the large degree trend on that 15-minute chart would have helped avoid these otherwise losing trades. This is why it's important for all MTPredictor customers to come into our training webinars to see how to use MTPredictor to much higher levels and not just take automatic setups like this just as they see them on the charts. With a little experience and teaching, you can do far better than just plain automatic trading. Let's have a look what this would have meant on some other markets. For example, on the NQ. The NQ here had a lovely DP sell as of the high of the day and was declining down nicely, but the market that I particularly like was the YM. Remember we had the large degree trend on the ES as a wave 5 high on the 15-minute chart and therefore down. Let's have a quick look at the 15-minute chart on the YM. Scroll in a bit so you can see this. Right mouse click here, Elliott wave intermediate, and exactly the same pattern, 1, 2, 3, 4, 5, with the high on the previous day here right at the minimum wave 5 WPT. As I've already said, once a wave 5 high is in, we anticipate that the trend is going to be down into the DP from the wave 4 or the previous wave 4 low in this case. So therefore yesterday, as with the ES, the YM trend was gauged to be down. So let's have a look what this meant on the short-term charts. Well, on the 3-minute charts we had some automatic setups. So if you were just playing the automatic setups, you'd have had a TS3 sell here on a black STF. So this would have been a standard automatic trade setup. The market came down in here into some TS3 buy setups. Black STF here. Again, these were valid trade setups. So you could have actually stopped and reversed here and it would have probably been about a flat day, maybe a very very small loss. However, now let's look at this these trade setups, but with an eye on the large degree trend direction being down, as we've ascertained with our 15-minute chart. So what does this mean? Well, I'll just clear this off. So which of these trades are in the direction of the large degree 15-minute downtrend? Well, obviously the TS3 sell is, these two buys aren't. In other words, they're against the trend. So if now you were in this short trade here that was in the direction of the large degree trend, you'd want to hold this and avoid these buys because it's with the 15-minute downtrend. So just from a standard trader's point of view, you'd have come down here into this area here, STF would have been weak, and you'd have banked a 3.9 hour profit. Remember, we use correct position sizing to vary our number of lots, contracts or shares to keep our initial risk small and under control, and therefore the profits are related directly to the losses. So this profit of 3.9 R would be approximately 4 times greater than the initial risk here. So a good result. However, another trade we look at is what we call our Holy Grail trade setup. Remember, on the 15-minute chart, this was our wave 5 high. Therefore, this was the initial decline down here, albeit a little bit choppy, but it was the initial decline. The market then made an initial rally up here in an ABC pattern. In Elliott wave terms, this would be a wave 2. What unfolds after a wave 2? Well, after a wave 2, we tend to get a strong wave 3 type of decline, which is exactly what we had down here. So how do we trade this? Well, rather than coming out at the first target, which is the minimum wave C WPT, what we do is we extend our target out to the typical wave 3 WPT. Again, these are on the chart in advance for you to use before the market even gets there. So this would be our target down here. And as you can see, this would allow a trade down into this lower target for a lovely 7.5 hour profit. Remember, 7.5 hour means 7.5 times the initial risk. If we look at this trade here in the context of how the trade or how the day unfolded yesterday, this would have meant you'd have been selling pretty much the high of the day, which was there. You'd have come down here and you'd have been taking profit at pretty much the low of the day. Not quite the exact low because it dipped down a little bit down here, but that's not a bad place to come out. So therefore you would have been able to take one trade short to capture the biggest move of the day. If you'd like to find out some more information on how we trade some of these, I'll just go to the MTPredictor website. I'll just bring this into the video. And we've got a new section in our resources tab here on Elliott wave theory. This gives an indication of how I view the Elliott wave patterns in the context of my unique isolation approach. I then have a look at the Elliott wave rules and guidelines, some general things here, and then how to trade Elliott wave. And in particular, the one we're looking at in the YM was the holy grail of Elliott wave setups, which is this one here. And I'll just go through in here a little bit of explanation of why this is so important and how it fits in with other guidelines on the Elliott wave pattern. So it just puts it in context of why the holy grail trade setup is called that, because it's not necessarily the most profitable, or it's not the highest percentage of winners in this particular setup, but when the market goes down in a wave 3, because wave 3s are typically the strongest and longest in a completed Elliott wave sequence or 5-wave sequence, the profits are usually large in relation to the initial risk. So this particular trade setup here has the largest profit potential for the smallest initial risk. That's why it's called the Holy Grail. So you can go to the website and do a bit of background reading on that as well. So overall, yesterday was a very good day for MTPredictor with a fantastic Holy Grail trade setup on the YM for a lovely 7.5R, but it was all set up mainly because of the 15-minute chart position on the ES. Remember, the ES is the boss. This is the one that tends to move the markets, and there you go. Our analysis nailed that high absolutely perfectly, and as such set up the downtrend for yesterday, which gave us the ability to filter our trades in the short direction, which, if I go back to the 3-minute YM, allowed us to catch this lovely short trade here. Again, short from pretty much the high of the day to take profits at pretty much the low of the day is the best a day trader could have hoped for yesterday, particularly when the profit was so large in relation to the initial risks. And that's what MTPredictor did yesterday, and I think that was a very good result for all our MTPredictor customers yesterday.